Yep.
Hello, everyone. I'm Conrad Marais, a partner in the corporate team of Trinity's London office. I feel very privileged to be able to wish you live a very happy new year and to welcome you to our first Trinity Talks of the year. I'm joining you from a very bland office today, so apologies. I thought we should start 2021 with a measured optimism. Our topic today is off-grid solar, how to de-risk your investment. It's a great topic, I think, to start off the year, and is actually a long time coming. Even in the outer reaches of the corporate team, we have seen for a long time a number of off-grid developers doing good work, and we are starting to see the fruits of that hard work and investment and fundraising coming through our corporate team. Trinity is very active in the mini-grid sector. We've got projects across sub-Saharan Africa that we're working on in places such as Benin, DRC, Nigeria, Kenya, and we are working on other programs such as IFC scaling mini-grids and others that use World Bank grants and subsidies to deploy some of the more innovative financing models developed by the likes of Cross Boundary. Your Trinity Talks today will be led by Fiona Gulliford, a partner in our London projects team and a key member of our Francophone practice. Fiona has been at the forefront of these mini-grid projects, so no one better to be speaking to you today. We are also lucky, as you will see from the presentation, to be joined by Enea Consulting, who have been advising and supporting leading private sector companies and public authorities since 2007 around the world on energy transition. Speaking for Enea today will be Harriet Okwi, who is the head of Africa and Energy Access. Harriet has executed many consulting assignments, assisting corporates and government institutions strategize and invest in African power in particular. Thomas Cheviot is the head of finance and Africa at Enea Consulting BBox, where he advises clients on financial solutions to accelerate energy transition. He was recently the group CFO at BBox, where he managed financial strategy, the transactions and partnerships for the company. He focuses on energy and particularly providing financial advice, including structuring and fundraising services to corporates. So with all of that, let's kick off. Fiona, Harriet and Thomas will be looking to address a number of issues and themes in this session, highlighting, as you'll see, the diversity of this sector. There's perhaps a few words of caution about the range of off-grid and mini-grid projects out there and how this presentation applies to those. Also looking at how to approach these off-grid investments, and in particular why the traditional and I suppose well-trodden path of project finance doesn't necessarily work with these projects. And then, of course, looking at the key challenges in these projects. I think that's enough from me. Fiona, over to you.
Great, thank you very much, Conrad. And good afternoon, everyone, I should say. Good morning, depending on where you are in the world. Thanks for joining us today. As Conrad has said, if you could move to the next slide, please, Conrad. This is quite a diverse topic, obviously, to deal with off-grid projects and solar in particularly. So just to sort of start, I'm just going to sort of set out what we've sought to do in this presentation, and I think, or discussion. And I think, we're all very familiar with the off-grid sector, but it does incorporate a wide variety and a huge different scale of projects, from isolated or interconnected mini grids to big C&I projects, and then back down to the smaller solar home systems. But within these three sectors themselves, there's a great diversity and scale of projects. But I think essentially, there are still a common, there's a lot of different set of challenges and risks for each particular sector, but there are some commonalities. I think for the purpose of this topic, one of the big client demands that we have certainly seen here at Trinity is really for advice on how can you get your mini grid projects really up and running and attract financing. What does it take to make them attractive to investors? So for the purpose of this presentation, we're really going to focus on mini grids, and I think we'll really discuss those with reference in some places to the solar home systems market. And I think we've really sort of narrowed it down to these two markets because these are the categories of off-grid projects which do consistently struggle to secure private sector financing. And in particular, with reference to mini grids, we are sort of looking particularly at those isolated mini grid systems. I think with C&I, it's a market that doesn't really have that much difficulty in many cases in attracting private sector investment. So I think for the purpose of what we're really discussing today, we're going to put C&I aside. Next slide, please. Con. So why solar? Again, we selected specifically solar mini grids because we ourselves have seen a massive uptake in clients deploying just solar mini grids. I think really there's many reasons for this push towards solar. I think first of all, most governments, particularly in the markets that we'll be using as examples in sub-Saharan Africa, they have got renewable targets, they've got electrification targets, and in both of those cases, solar is a really good tool to help them get there. It's easy to construct, and also it helps achieve those renewable targets. I think another really important aspect is, and we'll come on to talk about capex and costs of mini grids, but whilst the upfront capex may be high, in the long term, solar will be cheaper to run than a fossil fuel powered mini grid. An advantage of clean energy is obviously that it increases access to funding. There are a lot of funds out there that are set up specifically to fund renewable projects, and having a solar mini grid helps you satisfy that criteria. That's not to say that clients aren't looking at hybrid. There is obviously still a market, due to demand, there is still a market for having a hybrid solar diesel mini grid. And increasingly, people are looking at including battery storage solutions in with the solar mini grid component. I think it's obviously worth bearing in mind that there is obviously clearly a higher cost element to this, but it's all components that are being used to help create more reliability. And I think another thing is that solar has seen over the last few years, increasing reduction in cost. And there's been great developments in how you can utilize this technology to create a mini grid and also monitor and organize payments. I think it's also worth saying that whilst we're talking about mini grids, it's worth bearing in mind that there is a massive difference within the sector simply between are you constructing a mini grid in a rural area or in an urban area. And I think a lot of the examples we will look at are geared largely towards the rural mini grid. I think that's where we've seen more of a push. And obviously there are many challenges to mini grids, which, as we will talk about later, are probably more mitigated by having a rural mini grid, such as grid arrival. So I think generally, we would agree that there's a lot of investor appetite at the moment to fund solar off-grid, in particular mini grids initiatives, But also increasingly, I would say in the last 18 months, we've also seen a lot of refinancings of companies that are producing solar home systems. Next slide, please, Con. So the purpose of this talk is to really discuss how we de-risk off-grid investments, and in particular, as I said, mini-grid investments. So what challenges are there for mini-grid investments? So we're going to take a look at really 4 key areas. The first is operational risks. What is it during the life of your project that could happen that really could put the project in jeopardy? What could interrupt your revenue streams? So those are the sort of the operational risks that we will discuss in more detail. The second is project profitability and cost recovery. Really what makes these types of projects unique as opposed to, say, grid connected IPP, that makes it more difficult to really guarantee your revenue stream and to ensure that you can have clear cost recovery. Third is regulatory frameworks. We will come on to discuss, as I say, in more detail each of these topics, but one of the big issues can be you want to build a mini-grid project in a particular jurisdiction, but it may not even be clear what regulation actually governs the projects that you're trying to carry out. And it may be that there are many protections that, if you haven't got them contractually, you'd need to see them statutorily provided for under law. And then finally, which I think is really a component of all the other 3 areas of challenges, is the financing challenge, because when you add up all the other risk areas, it makes it really challenging to be able to procure financing. And I think when we talk about the procurement of financing, we're comparing mini-grid financing with the comparative ease with which you could procure financing for a well-diligenced IPP. Next slide, please. So how do we try and de-risk all these various elements that we will come on to talk about? So what we will do is we will discuss each area, and then we will talk about how we think that they have been or how they could potentially be de-risked. So one of the things that we have looked at is diversifying risk. This covers many different areas, and as we will discuss later on, it could extend to things like, do you aggregate up your projects? Do you look at other ways in which you can structure those projects that will allow you to have perhaps a portfolio approach? We look at financial or regulatory de-risking next, by which we mean, have you chosen a jurisdiction where perhaps the regulations can cover off a number of risks that will be of key concern to both a developer and an investor? And if not, is there scope within your contractual arrangements with an authority, for example, to be able to try and de-risk those elements? The third is incentives. In most jurisdictions that have successfully completed mini-grid projects, there has to be incentives to help the sector, and this is normally done in the form of donor support or in the form of subsidies. And then finally, financial de-risking. And I think what we will come on to discuss in more detail is how companies are looking at ways to create structures which can help to de-risk projects at development stage to enable them to be refinanced successfully. And also looking at ways in which other, particularly development finance institutions, are looking at creating programs and models which will enable projects to come to market in a manner that has been significantly de-risked. Next slide, please. So how can you apply de-risking elements to the various challenges? The first area we will look at, as we discussed earlier, is operational risks, and Harriet is going to take us through some of these issues.
Thank you so much, Fiona, for nicely putting everything into perspective. Yeah, so I was specifically going to speak on the element of demand. This is really a core problem because if we're talking about rural mini-grids, we're supplying power at a high cost to households that have lower incomes compared to the national average. So typically in a rural household, there's just a need for lighting, and perhaps a few people would need to charge their mobile phones. But generally, demand from households is quite low. If you look at productive users as well, those are also very rare. Perhaps some rural areas could have a sort of anchor productive user. But yes, but you don't have a very dynamic economy in rural areas to have several productive users. So to navigate around this demand risk, developers would need to actively support energy demand in rural areas. So perhaps supporting the adoption of low-cost appliances amongst households, or supporting consumer financing for affordable equipment by these households. The other aspect would also be to prop up that productive user demand by making a commercial effort to connect on-site productive users. Ultimately, the developer needs to have an optimal balance of household and productive users to make sure that it has the right customer portfolio that can withstand any cycles in the productive users' demand for power. So yes, over to you, Fiona.
Great, thank you. Con, could we go back to operational risk, please?
No problem.
Thank you. Great, thanks, Harriet. So I think demand risk clearly is one has been one really big problem, and I think one of the things that we often do say is obviously do your due diligence. One way of looking at this, I mean, a lot of the auctions, so for example, the auctions that we've seen in Nigeria, they're done by mini grid lots. Can you do your due diligence in terms of what customers will be within that mini grid lot? And looking at the bands of types of customers can again also help you to assess demand risk. And I think, as Harriet says, financing deals can certainly be a good arrangement, and I think that's where perhaps mini grids could learn some lessons from the solar home systems in terms of throwing in appliances for an increase in capex of your project. If you throw in an appliance that then is going to need power to be used, that can all help long term to increase demand risk. But some of the other sort of really big challenges are just basically those issues that if we compare it to a grid connected IPP, would already be covered by a government or a long-term off-taker counterparty, which are those things that neither party can really plan for, such as force majeure events or political risks, by which I mean things like changes in law, currency risks, things that really a developer simply can't provide for. So what do you do in these scenarios? Because certainly in a lot of the agreements that we have seen, I think there's a twofold issue. If you don't have a concession style arrangement that will wrap everything for you, then you'll most likely find that you just have a series of agreements. You've got your consumer contracts, you might have agreements with local communities, you may well have another agreement with a local authority, but essentially there is no counterparty generally willing to really take those types of risks. So another, again, we would say one of the really important things to do is to look at your project contractual structure, work out who is in that structure, who needs to be in that structure. It may well be that discussions do need to be had with authorities to say, look, these are things that you can control. We want you to take some of this risk. But it's not always the case that you can successfully do that. There are clear differences. There are some jurisdictions, I think particularly in the Francophone jurisdictions where our colleagues in Paris have been working, in Benin or in DRC, where some of the concession type arrangements do wrap these political risks and force majeure events, and they do provide a fairly good regime to enable a developer to be able to recover costs. But generally, these kind of risks, particularly, I would say, looking in places like Nigeria, these type of risks will fall and stay with your developer. So one of the really key issues is, what can you do to try and de-risk this? And I think there are things that you can do. Certainly, you can try and force majeure events if they are strictly natural events. The most obvious solution there is, can you make sure that these are insurable events, and you simply then would have to rely on your insurance. If there's an early termination, then clearly it doesn't change the risk that you're not going to get a big compensation payout, but if whatever happens is insurable, it might go some way to helping to de-risk that. When it comes to political risk, that's clearly a different ballgame, but it is possible to procure political risk mitigation products. So, for example, DFIs may offer protection, and I'm thinking in particular of things like the MEGA political risk package, or you can go out to the commercial market for political risk insurance. But I think one key aspect, and I know people talk about political risk insurance all the time and how it can help mitigate these risks, but it's worth bearing in mind that other than, and I think on the MEGA policy, it will cover things like expropriation, war and civil disturbance, currency convertibility and transferability as a sort of basic. But if you want to cover other kinds of political risk, so for example, change in law, government inaction, and this is particularly relevant in terms of procuring customs clearances, exports, enabling the procurement of actually the basic licenses that will be required, or environmental approvals. Those kind of things, if you don't have those protections in your contract, it is not possible to have them covered as a breach of contract obligation under a sort of MEGA policy. So it's worth bearing in mind that you still need to think very carefully about what you have, what you can as a minimum get into your contracts. There may be legal support for some political risk type events. Many jurisdictions, as a matter of statutory law, require that if a project is expropriated by government, that a party will be entitled to compensation. This is not ideal in some of the jurisdictions where we work because it can be quite a long and drawn out process to try and then obviously claim your compensation. But in the absence of contractual protection, if the legislation is there, then that's clearly key for a developer. And then grid arrival. I think this is another really important aspect, because you don't want to construct a mini grid and then find that the DISCO comes along and says, actually, we're now operating here, so sorry. And we'll come on to talk about this a little bit more when we talk about regulatory risk, but it's really important when looking at a jurisdiction to see whether the regulation does cover grid arrival. If there's no legislation to deal with this, Can you get undertakings from a local authority or from a government to deal with compensation in the event that there is a grid arrival? And if you can get compensation for grid arrival, how is this calculated? Are there deductions to this amount? For example, in the Nigerian regulations, if in fact your assets are subsidized by grants, the grant subsidy amounts are deducted from the compensation that would be due to you for grid arrival. And then I think it's also worth bearing in mind, if your project is successful and you've expanded your mini grid, does that mean that those additional assets are also covered on grid arrival? Because in some jurisdictions, it may only cover the initial mini grid assets which were contemplated at the point at which the government approved the initial mini grid license and the tariff for that project. So I think there are different ways of de-risking it. Regulatory de-risking is clearly quite important. Good due diligence is important to de-risk operational risks, and using risk mitigation products. But another way of doing this is portfolio and upscaling of risk, because I think if you are able to run a portfolio of projects, then particularly for things like force majeure events and political risks and demand risk, and even to a lesser extent grid arrival, if you are spread over several different sites in different areas, you can mitigate the impact of an event in one area impacting the rest of your portfolio. Next slide, please. So the next slide, we will deal really with what are the issues of project profitability and cost recovery? And I think we have covered some of those because there's a lot of overlap between these topics in operational risk. But I will hand over to Harriet to discuss some of these payment risks and tariff in more detail.
Thank you so much, Fiona. So I was just going to talk about pricing. So pricing for mini-grid power is, as Fiona has highlighted before, the regulatory framework in some jurisdictions is either unclear or non-existent, but so is pricing regimes for mini-grids. So where it exists, sometimes mini-grid developers are under pressure to use the same retail tariffs as the national utility. And for those of you that are familiar with power pricing in Sub-Saharan Africa, utility prices are rarely cost reflective. I think retail prices are mostly about 50% of the actual cost of supplying power, and I think it pressures mini-grid developers to apply similar tariffs to their projects can impact project economics. This is, for instance, the case in Senegal, where mini-grids have been required to apply similar tariffs to the retail utility prices. However, there are some examples of new pricing regimes that are cost reflective. However, this is also this still puts DESCOs under pressure to make sure that their tariffs are comparable to the national grid tariffs, yeah, electricity is such is an aspect of social impotence that governments will always be. So I suppose the question then for the developer would be, how do you navigate this? How do you charge the right fee for your lower income household in a rural area? And I think there's some approaches around combining a monthly fixed fee along with a unit-based sort of top up. That way the monthly fee can provide some sort of secure way for developers to recover some of their costs, and can still remain fairly affordable to the rural household. That's, you know.
Many thanks, Harriet. So, I think one of the other key sort of project profitability issues is clearly the fact that you don't get payment guarantees for this for your client counterparty. I mean, that's the bottom line, is that these are local consumers, and you're not going to get payment guarantees. So I think, and it slightly reiterates what we've discussed before, but I think type of customer is really important, and doing your due diligence on who would fall within your mini grid area. Particularly if you're in a rural area, I mean, is there a chance that within your mini grid area that there may well be anchor clients? There could be a telecom tower, for example. I mean, is there opportunity to also supply power to perhaps an industrial or a larger commercial client that could give a little bit more comfort in terms of customers? And I think when you look at other jurisdictions, I mean, looking at Nigeria as an example, they have essentially what is supposed to be a cost reflective tariff. That's clearly better than countries like Burkina Faso, where they have a uniform tariff, which, as Harriet has explained, you can't apply a national utility tariff to a mini grid developer, because it would simply not cover the costs. But in lots of areas, customers are limited by what they need to pay. So your rural customers in Nigeria, for example, fall within different bands, and those different bands have different tariff limits on them. So again, when you start due diligencing these lots, it's worth looking at what bands your customers are in. And I think we can really make use of great strides in technology, a bit like the solar home systems. There are great fintech solutions out there to help you get information on your potential pool of customers and their likely ability to be able to pay their bills. One of the things that we have also talked about is collecting payment. That's always a challenge, even a challenge for a national utility. But I think, again, what the off-grid sector has managed to do quite effectively is use technology to try and improve payment collection. And a lot of projects, you can apply a pay-as-you-go, so you don't get the power till you've actually paid for it. And a lot of this payment technology can be used on mobile phones. And nowadays most people have a mobile phone, so it makes it relatively easy for them to top up payments. The other problem that we have discussed, obviously, is the high upfront capex costs, which means that to finance these projects, you need a lot of equity up front. So how do you do this when you don't have a proven revenue stream or a reliable, necessarily, customer base? Well, I think a lot of this is dependent on subsidies. And I think when we come to look at subsidies as well, you need to look at the timing of those subsidies. But I think really without these kind of grants, it is quite difficult to sustain at the moment, particularly the mini grid sector. Other issues for cost recovery is really the sheer price that of due diligence and licensing, applying for licenses, applying for environmental approvals, carrying out all project development. It may be a smaller project than, say, a massive IPP, but that doesn't necessarily mean that the development work itself will be less intensive. And I think that is where a lot of these new DFI programs, that particularly things like scaling mini grids, which will essentially help to create a usable structure, or even looking at some of the other models that developers have produced, where you agree upfront a set of criteria, and it can make it a lot easier for developers to work within a smaller set of parameters. that are otherwise just not cost effective for a deal that needs to be equity financed up front. And then moving on to concession and project bundling, again, it's the same point that we've had in other risk areas. I mean, obviously the size of these projects, they're very small. We're not talking, some of these projects won't even be 1 megawatt. So the size of a project would make it very unattractive and often below the value of most investment tickets. So again, if you put these all into a portfolio, it does spread the risk, and it makes the project value bigger, and it then makes it more attractive to investors. And certainly, and I think we'll talk about this later in very briefly, but people like Cross Boundary, they have very effectively created this financing model where they create the asset codes, and developers put the mini grid assets and all the development stage work into this asset co, and then that asset co is bought out by the mini grid owner. But if the mini grid owner has a series of asset co's, it can then get funding, particularly at an equity holdco level, far more easily for equity and at least mezzanine financing, because it has a portfolio of projects. Then moving on to regulatory frameworks, and I'm conscious that we're probably running out of time, so I will try and speed up a little bit. But I think, again, these are all aspects that can be quite challenging. Do you, for a start, even have a sector-specific legislation? And most jurisdictions don't necessarily have a specific mini-grid regulations. We can look at places like Nigeria, and Nigeria is one of the bigger markets at the moment for mini grids, and that is probably because they do have a clear regulatory framework. So you do know at least how the licenses are supposed to work, who is supposed to give you those, who you procure those licenses from, and in fact the time period within which you should expect to receive those licenses. If you take other regimes like Senegal, for example, the time it can take to get a license can be so long that it becomes very, very expensive for a developer. Then there are all the other authorizations, the building permits, the environmental approvals. And again, as we've said, environmental due diligence itself can be very, very time consuming and quite expensive. So again, if your regulation can set out what you need, that clearly helps keep down costs. Again, is your tariff regulated? And again, as Harriet has talked about tariff, there can be real challenges if you can't apply a cost reflective tariff. And it's also worth bearing in mind if there are caps within those tariffs on the amount of pass-throughs that you are able to recover. So, for example, if you look at the MITO calculation for tariffs that applies in Nigeria, it does already fix the FX rate. So if there is a fluctuation in FX rate, that's not necessarily going to be covered as a cost pass through, because the tariff will assume an FX rate for you. Grid arrival, again, places like Nigeria do actually cover off grid arrival, and I think it's really important that if this isn't covered, can you get it covered in an authority agreement? And I think when we look at other, particularly francophone jurisdictions, you will find, and we've looked at DRC, for example, or maybe some of the other smaller jurisdictions like Benin, you look at your concession agreement, and there should be provision in that agreement to really clearly set out how you could be compensated if the grid arrives in the area where you're operating. Although for most developers in very rural areas, I think you can take a reasonable assumption that it will be years before the areas are electrified. So there are certainly very different risks between doing urban and rural mini grids. Then we move on to exclusivity, and this is a really big issue. You don't want someone else building a mini grid in exactly the same area, coming in and then trying to serve the customers that you've got, and that again would hit your demand risk. So does the law govern exclusivity, and do your agreements, particularly with the local communities where your mini grids are, do these contain adequate protections to ensure that you're not going to have other parties building mini grids in competition to yours. And I think, again, this is a big issue, particularly in urban areas. And another issue worth bearing in mind, and perhaps we will touch on it later, is the fact that exclusivity may prevent other mini grids, but is it still going to prevent C&I projects from taking place? And particularly if you have got anchor clients who are buying power from your mini grid. And then finally, it's we'll move very quickly to financing risks, as I think we are running out of time, but this is one of the sort of really big areas, and I think where you can't really offset regulatory risks where they exist, then I think for financing, one of the ways that a lot of development can be offset is by ensuring that, to the extent possible, if you can negotiate with an authority, that contractually you try and cover off those risks, which makes it easier then to present the risk allocation at financing. And certainly a lot of the programs that are now underway to try and create more uniform mini grid projects, the idea is to create a set of sort of bankable project documents which can then be stapled with financing. And I think this is really the sort of initiatives that people like the World Bank, through the IFC Scaling Mini Grids, this is where they are aiming to end up. I think obviously sponsors, really subsidy and donor support is really so important. I think long term we'd like to see a sector that doesn't rely on subsidies for sustainability, but I think for the immediate outlook for the market is that subsidies are essential, and if you're operating in a market that will offer subsidies, particularly ones to offset that very heavy capex initial costs, then that is certainly something that is going to help to offset financing risk. I think another way of, as we said, is obviously diversifying your lender base. So I think obviously you've got equity financing, you have essentially you may then be able to refinance with senior debt, and I think it's very unique in the off-grid space that you will have to expect in the life cycle of your project to have a lot of refinancing and to be having lots of different layers of financing. And I think the sale and purchase model really illustrates this perfectly. And I think, as we've said earlier, one of the developers who's really sort of pushing in this market are people like Cross Boundary, with key developers, people like PowerGen, is to create this model where you try and make your mini grid into a structure that would lend itself more to a project financing style arrangement. So you ring fence your assets within an asset co which will own the mini grids. Meanwhile, all your pre-development work, your licensing, that's all been done at the developer stage. And then ultimately it will be transferred to an asset co, and the owner will buy the shares in that asset co. And I guess the advantage to this is that between the owner, the operator and the asset co, they can try and work out a workable way of allocating risk amongst them. And certainly one of the key aspects of this is that it enables particularly the owner to be able to procure the financing necessary to be able to acquire the asset co and then acquire a mini grid. But it also then puts the developer in funds to be able to go off and develop more mini grids. And it then helps with the whole process of upscaling and creating big portfolios of mini grid projects, which again enable in the long term better long-term financing. Yeah, so and I think that really covers off sort of the point about equity commitments and having equity funding vehicles, because I think that kind of structure really lends itself to creating a holdco vehicle which can be used as a financing vehicle. But I do think that one thing that we mustn't lose sight of when we look at all these risks, and I know I have said that in some jurisdictions government will cover these risks. They do enter into concession agreements, and they can be as comparable pretty much with an IPP, but for us that's not generally the rule. But I think we mustn't lose sight, and I think Harriet's touched on this, that off-grid is essential infrastructure. It is part of countries' goals in reaching electrification, and it is a way in which it can produce social development for people, particularly in isolated areas. So there must be scope to negotiate with authorities to get some measure of reasonable support for some of the risks that are very difficult and really risks that developers can't take. And then another risk is with financing, particularly is with currency, because a lot of developers and mini grid owners will obviously procure their debt in hard currency. How can you, particularly at the asset co level, how can you make that work when you've got risks of FX within country? And I think other things to look at is how you can procure more local lending. Obviously, it is much more high cost and tends to be a short tenor, so it doesn't really lend itself to lending into a project. But I think there are initiatives that we have seen DFIs extending credit to local banks to enable them to put funds into to then lend on to local mini grid companies, and also some DFIs will lend in local currency. So I think these are all things to think about when you're structuring your financing as ways to de-risk. Next slide, please, Gon. And then I think we'll wrap up now really with, where does the sector go from here? And I think one of the big takeaways from this whole discussion is that, players are scaling up, and scaling up mini grids is really going to be the key solution to de-risking projects. And also looking at the initiatives that are being developed, like the World Bank Scaling Mini Grids programme, the development of more subsidy programs for based on demand risk, and also based on just putting in connections. All of those things help to ease the burden on capex, and also looking at models like the cross-boundary model for asset funding through the purchase and sale agreement, and then the operating sales agreement, which are documents that are developed to really help de-risk and also support funding at an equity level. And as I've said, can governments be persuaded to lend more support? And should DFIs be, DFIs are putting loans into governments to give subsidies. Should they be putting more pressure on governments to lend more support as a condition to this funding? And then I'll now move over to Thomas very quickly, just to sort of wrap up, because we mentioned earlier the solar home system. Obviously, that has its challenges itself in being able to attract financing. But I do think that there are lessons that perhaps could be learned from the solar home system and could also be applied successfully to mini grids. Over to you, Thomas.
Yeah, absolutely. Thank you very much, Fiona. You've covered a lot, so I won't repeat a lot of the topics that you have already mentioned, but a few things to mention here. The first one is you mentioned technology. We've seen that the HHS business has really grown fast and to almost an industrial level in East Africa, thanks to mobile money and pay-as-you-go approach. I think that's also important to consider when you look at the mini grid space. I know, for instance, in general, West Africa is slightly less advanced in terms of the coverage and the usage of the end customers with mobile money. I know, for instance, it might be an issue in Nigeria in some regions. People tend to use more cash. So it's very important to consider those factors and to develop a project where there is mobile money, so telecom, of course, coverage, mobile money usage, so that it does facilitate a lot the credit risk. I think when you look at the SHS also business, it's widely spread out now in East Africa, so in Kenya and Rwanda, Uganda, etc. People do know what an SHS is. In West Africa, in some regions, I'm talking about, with my previous experience at Bbox in Togo, for instance, when we entered the market, it was a completely new product. So you have to really think about how to convince people, to adopt that solution. And the same applies to the mini grid. You have to explain to the communities and to the people that will become your clients how they should, what is the business model and how they should go about, using the mini grid. Last but not least, maybe in terms of regulation and policy, I think this plays a huge part in the adoption of the mini grid and the development of the sector across Africa. We've seen some interesting projects in Togo, for instance, in the DRC, and in Nigeria, in Kenya. So I think that's critical that states and governments actually play their role in favoring a framework that could attract private sector and private financing. I think that those are the most important points that I wanted to raise.
Thank you, thank you, Thomas. Well, we've run slightly over time, and apologies to everyone who's still with us. We probably have 5 minutes or so just for a couple of questions. We've had quite a few come through, so apologies to everyone that we're not going to get through all of them, but perhaps just a couple to take us home. Fiona, maybe this one for you that's come in here. Are there key differences between what some governments are prepared to offer to support mini grids?
Yeah, hi. Certainly, Con, yes, there are key differences. And I think whether that's, at the policy level, or whether that's actually at the ground root support level contractually. So I think, as we mentioned, you've got markets where governments may be prepared to wrap risks for things like political risks up in a concession agreement, so they will bear those types of risk in the event that the project is delayed or is terminated. But in other jurisdictions, governments just leave that risk lying with the mini grid developer under its agreements with local communities and or customers. So, taking Nigeria as an example, but then looking at some of the concession type arrangements that we've seen in the Francophone jurisdictions like Benin and DRC, it's not been such an issue under the concession arrangements, because government appears in a lot of those instances to have taken more risk.
Thanks, Fiona. Thomas, perhaps one to you to end the talk. What are the key markets for, I assume, this sector in Africa? Are you seeing any particular trends or markets that you consider are key at this particular time?
Yeah, thanks, Conrad. I'd say, of course, Nigeria is one because of the potential of the market. It's given the population of Nigeria and the electrification rate being so low, there's a lot to do. I think we've seen some interesting developments in the last, I'd say, year or so in Nigeria with increased interest and policy regulation that hopefully will help support the sector, more grants, subsidies, etc. So I think that's definitely moving into the right direction. Kenya is in East Africa, of course, an obvious one. It's a big market, and I think there's still quite a lot to do. And yeah, in West Africa, I know pretty well Togo, and I have to say that they did some interesting things within the CISO project, which is aiming at electrifying rural Togo. So those three markets are quite interesting to start with. Yeah.
Thank you. Well, without anything further, thank you very much, Thomas, Harriet, and Fiona. It takes a lot of time to prepare these presentations. So we're very appreciative for you to join and get us through this talk. Thank you very much. Before I sign off, thank you to everyone for joining, and just a reminder about future talks. If you do want to register for future talks, it's events@trinitylllp.com. We've got our next sessions on PRI and battery storage, so look forward to seeing you soon. Thank you very much.
Thanks for having us.
Yeah.